Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings, and sometimes what we find is less about groundbreaking innovation and more about, well, keeping the lights on for a bit longer. Today we're diving into GigCapital9 Corp, an interesting company that's just made some moves on the public market. This report is essentially their first look after their big initial public offering, or IPO. Think of it as their immediate financial snapshot right after they started selling shares to the public. What we're looking for here is how much money they've actually brought in from that offering and how they've set themselves up financially from day one. Let's get right into the details of what makes up their public offering. GigCapital9 Corp, or GIXU as it's known on the Nasdaq, has structured its public units in a rather unique way. Each unit you buy is actually made up of a Class A ordinary share, something like a regular stock in this company, and importantly, a right. Now, this right is special. It's one right that you hold for every fifth of a Class A ordinary share you can eventually get. This means if you hold 5 of these rights, you can redeem them to get 1 full Class A ordinary share. This whole setup is tied to the company's goal of eventually completing a business combination, which is a fancy term for merging with or acquiring another company. So when GigCapital9 Corp went public, they sold a lot of these units. We're talking about 25,300,000 units. Each unit cost $10. That alone brought in a massive $253 million. That's a huge chunk of change right out of the gate. But it doesn't stop there. They also had some private sales happening at the same time. They sold what they call private placement units to certain investors, including their sponsor, some directors, and advisors. These private units were priced a little differently, around $9.74 per unit, and brought in an additional $1.04 million. On top of that, they sold special Class B ordinary shares and even more private placement units to other investors, adding another $2.8 million to their coffers. Now, what happens with all this money? Well, most of it, specifically $253 million that came from the IPO and those private sales, has been put into a special account. It's a US-based trust account at a bank called JPM Chase. This money is held by a trustee Continental Stock Transfer and Trust Company. This is pretty standard for companies doing an IPO like this, especially those that are essentially blank check companies, also known as special purpose acquisition companies or SPACs. The money is held in trust until the company finds a business to acquire or merge with. If they don't find a suitable deal within a certain time frame, this money is typically returned to the shareholders. What's really interesting here is the audited balance sheet that's been released. This document gives us the first official look at the company's financial health right after its IPO. It shows the assets they have, which in this case is heavily weighted towards cash held in that trust account. It also shows their liabilities and equity for a company that's just gone public with the main goal of finding an acquisition. This balance sheet is primarily about the capital they've raised and how it's being safeguarded until a deal is made. Remember, at this stage, their operations are often minimal, so the numbers here reflect the IPO proceeds and the initial organizational costs, not revenue from ongoing business operations. What this all tells us is that GigCapital9 Corp has successfully raised a significant amount of capital through its IPO and private placements. The funds are securely held in trust, awaiting deployment for a future business combination. The structure of their units with the special rights attached suggests a strategy focused on incentivizing a successful merger. It's important for investors to understand that the value at this stage is heavily tied to the management team's ability to find and execute a good acquisition deal. The company currently has no significant operational revenue, so performance hinges entirely on their future strategic moves. The initial capital raise is strong, which gives them a good starting point. But the real test will be the effectiveness of their acquisition strategy in the coming years. Alright, that is our breakdown of GigCapital9 Corp, its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. Thanks for watching. See you next time.